Hello everyone, this is Mayank and welcome to my channel. So today we'll see 5 stocks that are dividend paying stocks and we'll discuss this based on the growth opportunity as well. So this video is part of my Telegram poll which I created few days back, probably last week, and I promised people that they will vote for some topics and we'll create a video based on that. So this is the result of that vote. So we'll discuss this particular video in 5 different segments. First segment will be what are dividends, then we'll see why a company pay dividends, and then we'll see who should invest in dividend paying stocks, like what kind of investors should invest in dividend paying stocks, and then we'll discuss or we'll see in brief 5 dividend paying stocks, and after that I'll create a rating kind of on a document based on different parameters, and we'll give an order of 1 to 5 which stock is best in terms of dividend and also in terms of growth opportunity. And at the end I have a bonus company's name which also dividend paying company, so you can also consider that at the end of the video. So I request you to watch this video till end so that you get all the information. Also you get our rating what I've given based on my own personal research and all personal analysis, and then this bonus stock as well. So before we start the entire discussion, I'll request you to subscribe my channel if you have not done so far, and also don't forget to hit the bell icon so that you get notified whenever I publish any new video. And also I have created one Telegram channel and some members we have joined there, so I'll put that link in the description so you can join that Telegram group also if you're interested. There I put some kind of updates where you get to know the market or some kind of my personal trigger points. I'll not spam your inbox, we don't put a lot of messages in there, so you will save from that kind of regular notifications. So you can join that if you want. So let's start now. So first topic is what are dividends. So see, dividends are incentives that a company pays for buying this stock and holding it over a period of time. So basically this is kind of a kind of appreciation which you get from the company when you invest in them and you hold hand them together throughout a period of time. So most of the companies pay dividend 2 times. One is interim dividend and one is final dividend. And this together combines dividend yield. And when we say dividend yield, there's a percentage of dividend what company pays over a period of year. So that's what we call dividend yield. So that's dividend yield means that kind of money you are getting when it comes to percentage of the total face value of the company or total stock price of the company, sorry. So this is called dividend yield. Now we'll talk about why a company pays dividend. So see, there are 3 reasons why a company pays dividend, and that reason varies from stock to stock. Okay, so first thing is to reduce excess cash reserve. So there are some companies, especially the PSU companies, which is a lot of cash, but they don't have much expansion plan. So what they do, they reduce the cash reserve. This also helps them in some kind of taxation. So for that purpose, they reduce the cash reserve and they split that cash in the form of dividends among their share investors. So this is one of the reason. Second reason, which is more towards the PSUs where the government holds a lot of stake. So there are companies where government, President of India or Secret government, they hold a lot of stock or they get dividend, and this is kind of a revenue for the government. So these PSUs give a lot of dividends, and this is a way through which the government get kind of a fund in their own entire processing. Apart from tax, also revenue source for the government. So if you see any stock, I will discuss in that list of 5 dividend stocks. If government is a majority holder, 80%, 90% kind of holdings they have, and whatever dividend company pays, majority of them goes to the government. And since we also retail investors have some part of some small amount of share in these companies, we also get the dividends, but basically it's only for government. Third part is to reduce the investor churn. In some cases, what happened, to maintain loyalty of the investors, some company pays dividends. So apart from the appreciation, the growth what we get when you invest in a stock, this small amount of dividends also comes as a bonus, also comes as an incentive for us, and it's a surprise gift at some point in time what we get apart from the appreciation. So this is also a way to reduce investor churn for some stocks, not for all, but most of the stocks do this which are not government or not PSUs. So these are the basically 3 reasons why a company pay dividends. So now we'll see who should invest in dividends. So see, there the companies which pay a lot of dividends, you not see those going through a lot of appreciation. Those are not multi-baggers, because those companies have a lot of cash and they don't have expansion plans, and that's the reason they distribute the cash among the investors. So these companies doesn't have any kind of expansion, like kind of exponential growth, and the people who are want to have a certain kind of fixed income or kind of their money they want like FD secured kind of investment, those kind of people or those kind of investors should go for dividend based companies where growth if they get is fine, but their money should be protected. And since this is PSU companies, in most of the cases their money is protected and they get a certain kind of dividend or certain kind of you can say pension plan kind of stuff also. So if you are retired, if you are a retired person or if your dad or mom somebody is retired and they get a good amount of some kind of one-time money from the government, then instead of putting that in fixed deposit where your money is locked for a period of time, 5 years, 7 years, that money can be put in this kind of stocks where you get at least the return what you get in FDs. In most of the cases, it's a little bit more than that, and also you get the liquidity. So you can sell a stock whenever you want. You can sell it in 6 months, you can sell it in 1 year, you can sell it in 2 years, 3 years. But in the case of FD, you can't sell it just like that. You need to fulfill that duration whatever you signed up for, 5 years, 7 years, things like that. So that's a liquidity what we get. Along with that, you get the security and also you get some kind of interest which is more than FD. So people who are looking for that kind of reliability, we're not running after the exponential growth, they should go for dividend paying stocks. So dividend, in my way, if I say in one sentence, dividends are alternative to fixed deposits with high liquidity. So this is what dividend is all about. And so people who have a big corpus, they don't want that corpus to be idle. In the same time, they don't want them to put in some risky investments where that might get eroded over a period of time. So dividends are for those kind of people. Now we'll see 5 companies which pay dividends. So to start with, the first company what we are going to look for is PFC. So PFC is Power Finance Corporation. So this particular company is an NBFC in the power sector. So this particular company actually it gives money to government projects, state-based projects to execute some power related projects. So their market cap is close to 30,000 crore, 29,278 crore. So it's a mid-cap company. Current price is half of the book value, close to half of the book value, and their stock P is very less. So it's just 3.15. So they have good potential to grow also from here. The ROE is good actually. If you see, it's only 8.91 and ROE is 14.8. But when it comes to any NBFC or finance-based companies, this particular part also discussed in my previous videos where we discussed about some kind of financial companies, banks and all. So for those companies also, the ROC is very good when it comes to a NBFC. This particular 14.8 is a good count when it comes to NBFC. Also, this company has a lot of debt. Again, I told you, when this company has a lot of debt, 6,46,000 crore, that means this company has a lot of power to loan out that money. So this is what this company is all about. So they loan out money. So the more is their debt, the more they can loan out. So this is their war chest basically. And now we'll talk about dividend. Dividend was this company paid 8.57% of dividend. So that's almost twice compared to most of the FD what companies pay. So this is that, and you get the flexibility also. So they have high dividend yield. Also, one more point to consider is they have a CAGR growth of close to they have a CAGR growth of close to 6% for a period of 5 years. So you get a 6% compounded growth also. Along with that, you get a dividend yield of 8.57%. So this is the first company, Power Finance Corporation, what you have seen now. Second company for me is Hindustan Zinc. So this Hindustan Zinc is a company which is under the group of Vedanta. And this company has grown way fast now after it fell in the market for 2020 crash. So right now, this company has a stock P of 16.4, which is good. ROC is 27.5 and ROE is 22. That is a very good kind of fundamentals. This company has debt is 6,473 crores, but the net profit annual itself is more than the debt. So this company can be debt free whenever they want to reduce the debt. So it's a good company. Dividend yield is 6.87%. So that's again more than FD. One point we can notice, zinc is high in demand, and also in the future, keeping EV in perspective, zinc will always be in demand. So there is more to these companies like PFC, Hindustan Zinc. There is much more information about that, but we don't want to discuss the details in this particular video. So for those fundamental analysis, if you are interested, you can let me know in the comments. I'll create an entire video individually based on these companies about the financial details, about their fundamentals, what they do, what kind of future growth these companies can predict. So those things we can discuss in a different video altogether. So we'll look into our third company. So our third company today is Hudco. So Hudco is into housing. So Housing and Urban Development Corporation Limited. So Hudco is also in PSU. and it is a small cap company, so it's 8,648 crore. Current price 43 and is less than its book value. And also this company is also an NBFC, so it has also a debt of 61,675 crores, which is also good because it can loan out that money. ROE is 9.7, sorry, ROE is 14.7, ROC is 9.71. So this is also good when it comes to a particular NBFC company. Stock P is very good, only 5.79%, sorry 5.79. So this company fundamentally also looks good. Net profit they registered about 1,708 crore for this particular year, so that's a good profit. Now if you see dividend yield, it's 7.18%, so it's also higher than your traditionally fixed deposit schemes. Now we'll look into the fourth company. What today we can look into is Petronet LNG. So Petronet LNG, as we all know, it's into refinery of oils and everything. Petronet LNG. What happened? Okay, I guess I lost my Wi-Fi, so I'll connect my Wi-Fi to search that. But before that, I'll tell you Petronet LNG is all into refining, and this particular company has seen a good growth over a period of 8 to 10 years. I personally hold this stock from close to now 12-13 years. 12-13, I mean, like at price of 25, this stock was bought by me long back, and still this stock is there in my portfolio right now with the old Demat account. So this stock is very good, and it has shown a lot of growth in the past as well as this future perspective also very good. From dividend point of view, this company pays dividend of 5.15%. That's also relatively decent compared to your FDs. But the good part is that the ROC is 28.1% and stock ROE is 25.8%. So that's a quite attractive ROC and ROE. That's why even dividend yield is not as great as other companies what we discussed. Still this company is there in the list. Also promoter holding is 50%. Debt wise, it is little more, 3,218 crore, but net profit is 2,700 crore. So there is not much difference in debt and net profit. So, and this company is fundamentally very good, has done very good in the past, and that's the reason this company, is in our list today. Last company what we look is RITES. So RITES is again a government based consulting company, and it's a new company. So its market cap is only 5,728 crores, and the stock is 13.2. Now if you see, the ROC is very attractive, 34.3, and ROE is 24.3. So it's a very good. Second best part about this company is asset light model. So it's a consulting company, doesn't have any hardware any kind of factory kind of setup, so they can grow very fast, and the ROC can grow very fast from here also. And they deal with a lot of consulting projects, not only a particular domain like water or building or construction kind of stuff. They do lots and lots of consulting. We can create an entire video on RITES, discuss all about their business, what they do, their future growth, their past and everything. It's a very good company actually if you see, but it's a new company, so we don't have much information on this particular company right now in terms of data, but we can definitely create a good video on that. So if you're interested, you please let me know in the comments. Based on that, we'll create a video for this. Dividend yield is 6.71%. So that's more than the traditional FD, and this is quite attractive also. So you can definitely put this company in your dividend paying list. So these are the 5 companies what we discussed. So we'll see now the chart, so Excel sheet based on which I have discussed the different parameters, and based on that I've given some rating to all these companies and preferences in the ratio on the order of 1 to 5. So PFC for me is rated as 1 because PFC has a very good dividend yield, has a stock CAGR of 5%, and this company looks personally for me as very promising because India is going through electrification in the small villages and connectivity, and it will go further in the future also. So keeping that in mind, PFC is rating 1. Hindustan Zinc is rating 2, again seeing the growth. Hudco is rating 3 because it's not growing as fast as we thought, and also government has lost a lot of money recently in this entire pandemic. So I think this plan of housing will go a little slow in the future, and that's why the rating is 3rd. Petronet LNG is a very good growing company, 4%. Sorry, in the average given rating as 4, just the reason being, even if growth is good, the dividend is very less. So anybody who is interested in high dividend, this video is only for those people specifically. And keeping that in mind, somehow Petronet LNG rating is only 5 because only for dividend is very less. RITES are given 5. Sorry, Petronet LNG is 4. RITES are given 5 because we don't have sufficient data for stock CAGR. Dividend is okay, it's not bad, it's kind of good only, but stock CAGR is not present. That's why the rating is 5. So you need to watch out for RITES. If RITES come across as good growth, then definitely RITES is one of the best company out of these 5 to invest. But again, we need to wait and see how this company performs overall. So this is my entire analysis so far in these 5 stocks. Based on that, you can definitely choose one or two or maybe three based on the kind of money you have. You can definitely go for investment in these companies. And right now PFC is very good price also. So you can definitely invest in PFC, or you can take your decision based on any of these 5 stocks and invest your money. As promised, I put the name of the last company which for me looks good also. So that company is ITC, the bonus company which I told, that's ITC. And ITC, why it's bonus and not in the list? Because ITC is not growing as expected in terms of stock price. The company is very big, 2,52,000 market crore, 2,762 crore market cap. That's a large, huge company, but the cigarette business is holding them back from growing, and for some reason the stock price is not reflected, or the growth is not reflected in the stock price. Now they're going through a demerger of their FMCG business, hotel business, and their cigarette business. Maybe after that the stock price may see appreciation, but as of now dividend yield is less than 5%, so I've not included them. But it's a good growth opportunity company. So if you can watch out for this, or if your priority is not dividend yield, but your priority is equally divided between dividend yield and your growth, then maybe you can watch out for ITC, and you can just put that in kind of a list, and then you can see how this grows, and based on that you can invest in it. So this was my analysis of the entire video. So if you liked it, please let me know in the comments. Also hit that like button. Don't forget to share it with your friends. We need to support each other and grow together. We need to be financially free. And if you have any feedback, let me know in the comment section. Till then, you stay safe. We'll see you in the next video. Stay safe, stay healthy, and we'll meet together. And if you have any suggestion, you let me in the comments. So thank you so much.